I wanted to go over new options traders' mistakes. I'm going to have to roast this guy. Take a look at his position. This was so stupid. He bought weeklies. You new guys have to buy. You will find which contract is guaranteed to lose, and you will throw all your money in that one. Why a weekly? You guys have money, and you're buying a freaking weekly. You had money to buy multiple contracts for 2026. You didn't even give me a reason on why a firm was going up, just because. We'll speak it into existence. Like it's magic, this guy says. What would you do in this case? Down 50%, contracts expires Friday, so you're guaranteed to lose. So you're going to hold it. You have $1,100, $1,200 left. You could buy a 1-year membership at Z Trades and get unlimited mentoring. You could buy a lifetime membership and never make this mistake again. If you were in here, you wouldn't have gotten in this to begin with. You'd have a membership, and you'd also be up this because you wouldn't have lost it. Let it run until the end of the day Friday, or take the loss and move on when the market opens Friday. Okay, so you're going to lose all of it. I'm so pissed with myself. I didn't secure my profits. I was making 20% when this hit 26. Up 300. Now I'm down 50%. So I'm really getting angry and fired up here because I see the stupidity in the market. And it's not at you guys. It's at me. I'm mad at me. Old me. I could have saved so much time. I'm not saying you have to sign up with Z-Trades. Don't do it if you don't want to. You can learn YouTube. These guys make their videos an hour long because they're trying to get as much watch time to get paid, and they babble about nonsense. Okay, they're not straight and to the point. I didn't get good until I had to hire a mentor. Unfortunately, I had to hire a mentor because I just wasn't getting it. And basically, he took all the losses for me in his 6 years before he was profitable and teaching me how to trade, right? But anyways, you've got to be in a group of people. If you're not going to pay for a group, be in a free one where there's people that know what they're doing that are going to flame you for dumb mistakes. A firm is interest rate sensitive, okay? Look at it curling around, right? It's probably going to shoot back up, in my opinion, to 75. Doesn't mean it will, okay? Probably by the end of next year, of 2025. But if it expires tomorrow, how am I going to make that money? You have the money to be in it for that. That contract could go to freaking $8,000 that you bought. You know? So this is just insane. So if you're just going to throw your money at a weekly contract, okay, it's not 50-50. It's more like a 10% chance of winning. I love guys like you, but it's also hard for me to watch. Why do I love guys like you? I'm on the sell side. I'm the guy selling and writing the contracts. I'm selling a contract, okay? Everything's opposite. Theta DK and Premium Crush and letting it expire means the more money I make, right? Theta is my friend. Time and Theta DK Premium Crush is now my friend. I profit off that. So it's like taking candy from a baby. Oh yeah, I'm sure it's going to blast in 1 second, right? And if it doesn't, you lose everything. Sure, go ahead, give me your money, right? That's, as an option seller, that's the mentality we have. It's like taking candy from a baby, especially you guys who gamble on earnings. Oh my gosh, do I love people who gamble on earnings. You're providing liquidity. Great. I'll sell the options contract to you. Yeah, I'm sure it's going to go on earnings. I'm sure. Oh yeah, right? And it gets crushed. Thank you. Thanks for the money, and I'm out of here. On to the next sucker, right? That's an option seller's mentality. I am on the buy side. But in order for it to be 50-50 chance, right? Just on paper, you would have to be in something that's low, that has something that's going to drive it up. Interest rate cuts. A firm, they lend money out. Excuse me, because I'm still sick. The higher interest rates go, the less business they have. Here's when interest rates were low, right? 2021. Right as Powell talked about raising interest rates, what happened? To a firm. Complete collapse. From $100 and basically $80 down within just, a half year to 15. Powell told you what was going to happen. interest rate sensitive stocks are going to get smoked. Oh my gosh, is that the same chart on Upstart because they're the same business? Oh my gosh, is that the same chart on Lemonade because they're the same business? Oh my gosh, did Rocket Mortgage tank too because it's interest rate sensitive? Oh my gosh, did PayPal tank too because it's interest rate sensitive? I can go all day. I'm not going to, now I'm getting a little bit immature here. So, what would be a good play on Affirm? You had the money, dude. You had the money. Let's go ahead and take a look. By the way, I'm an option seller. On this account is dedicated to option selling. The last video I did this was about $100 difference just 3 days ago. This is indicating I'm inversing options buyers by selling contracts, selling to enter. Look at that. Just from April, we're up 74%, and I've been very conservative. That's another video. If you all want a video on that, ask me. Affirm. What would be a good options play? Why is it up 99% this year? Because it's pricing in the fact that Powell's going to cut interest rates and business will be good. Stocks don't wait for something good to happen. If they know something good's going to happen, they're going to start running prior, right? What would be a good play? You had $2,400, dude. Would December 1st, right? That's a far out contract. No. 2026. 2026 would have been a good contract. I can buy. You had 2,400. I could have bought even in the monies. I could have bought two of those. $25 strike. There's 2,400. You had the money. Could have, that does now, just because I say this doesn't mean that this will happen, that interest rates will be cut and Affirm will go up. Anything could happen. It could cease to exist. But if I were to do it, I could buy these if I had the money. Right? Since they're in the money, they're not going to get crushed by theta as much. Further out of the money you go, if it doesn't run, the faster they get destroyed. Right? And if I'm an option seller and I can make money on a contract being destroyed, I could buy this one and then sell that one. Max loss is $335 instead of $2,400, right? Max gain is $1,165. That's a debit spread. Now we're really talking about swing trading. Now we're really talking about probability being in your favor. Let's say Affirm doesn't really go up that much at all. Let's say it just goes up to 30 by, late 2025. Well, this $40 contract is going to be basically worth zero. So I profited $825. If this is in the money, this may be a profitable play. So if Affirm goes up, the sell side loses money. Sell, call. And the buy side gains money. So how do you make money? Well, this is closer to the money. The money is the price of Affirm, which is $25.58. Okay? So this contract is going to gain money faster than this contract will lose money. So if Affirm shoots up to 30, you can assume, I'm shooting from the hip here, every $5 I make on this contract, I would lose $1 on this one. Right? This is a very well thought out play where we've skewed probability to be more in our favor. Or if we want to be very conservative, I could have bought a 25 and sold a 30. Max loss is $140. Max gain is $360. So for $140 instead of $2,400 on a weekly, I can have my hand in the pot for 2026. In fact, I may get in this. $140 doesn't sound bad to me. I may go a little bit wider, right? The wider you go, the more profit you make and more loss you make. The tighter you go, the less profit. Max gain is 170, max loss is 80. If I went 25 and 27, that's $2.50 out of the money. I'd probably like to go a little bit wide here. Max gain 740, max loss 260, right? That's a pretty good play. This is called a debit spread. In a debit spread, You buy one close to the money. What's the money? The price of a firm, 25. I could buy a 30 and I could sell a further out of the money contract, right? 195 max loss, max gain, 8, 2, 4, 6, 8. You lose 1 to gain 4. If the odds are 50-50, right, and you're buying calls on things that are low, those odds are in your favor. That's like flipping a coin. That's literally like flipping a coin. If we play a game, right? Hey, heads or tails? All right, you're tails, I'm heads. Okay. So if you win $4. If I win, I only win 1, right? If you lose 1, I lose 4. Ready? Heads or tails? Now, if we did that over 1,000 flips and it's 50-50, who's going to have the most money? It's a 50-50 probability. 4 to 1. Trading is a game of probability. No, it is. If it's not probability, it's gambling, which is what you were doing. 50-50 is gambling. Below 50% probability is gambling. Above that, where probability is in your favor, is not gambling. Trading does not have to be gambling, and I will argue with anyone who wants to. Right? It's very simple. It's just math. All it is math. Right? If everything was 50-50, then it would be humanly impossible for me to grow this account consistently pretty much every month. Why? Because I'm choosing things that have a 95+% probability when I sell options contracts. If it's gambling and it's true, how come then that would be impossible for me to do this? Maybe once or twice, not consistently for eternity, right? So, debit spreads are the way to go. Far out. Let's wrap this video up. Okay? You had the money. Okay, your average cost was 38 cents. Where is the calculator? Here we go. 38 times 63. Wait. 38 times 63. Bro. Dude. Join the Discord. Send me a direct message if you want me to analyze and just give you my opinion if I were to be in your situation. It is not advice, right? Just for me to educate you. I'm not going to tell you what to do with your money. I'm not going to tell you where to put it, but I can let you know what the probability of that is. Like, I'll do it for free. I can't stand to see decisions like this. You put $2,400 on a weekly out of the money contract. My gosh, dude. If I had a soundboard right now, oh my gosh. So here's another way. Now, my mind's just going all over. The wheels are spinning in my head. I don't have words. So there's multiple videos I can make on this. Now let's wrap this up. You either if you want a higher probability, you do a debit spread. You buy a contract and you sell a further one out. The wider you go, the more risk you have, but the more profit you make. The lower, the closer the strikes are, the less you make, but the less profit you make, less money you lose. Higher risk, higher reward. Lower risk, lower reward, right? Stop buying weeklies is the second thing. So either do a debit spread very far out or stop and also stop buying weeklies. All right? Find something that's low and that you believe there's something that's going to go up in value due to a certain event. Powell's cutting interest rates. It's pretty simple. There's a Bitcoin spot ETF coming out. It's pretty simple, right? It's not very hard. And stop choosing a dang weekly. And like, for instance, there's a Bitcoin spot ETF. There's a the Bitcoin halving is coming January 2026. It's pretty simple. Very simple, actually. It's $3. And I can also turn it into a debit spread, max loss, $81, max profit, 900. 9 to 1 risk. If you guys like this content, Please like and follow for more. If you want me to make you a video, come in the Z Trades Discord in the description. Shoot me a message.